Hi, I'm Steve Spencer from SME Capital. I got an email a couple of days ago from a trader asking me about trading stocks with large gaps. And it just so happens that in the last couple of days, our number one trading idea for 2 consecutive days were stocks that had large gaps. So I thought I'd take this opportunity to spend a few minutes on these specific examples on how I approach this, and also point out that we do have training programs, mentoring programs that go into these types of trades in much more detail. So first thing, stock has a large gap. Generally, large gaps are because there's a catalyst. Really good earnings, drug approval, company raises guidance ahead of the next quarter, things of that nature. And what happens is the stock will close at a certain price the prior day, and then in what we call the pre-market, before the official market opening hours at 9:30 a.m. Eastern time, some exchanges, there'll be what's called pre-market trading. And we start to get an indication of where these stocks will open in relation to the prior day's close. And so they have these strong catalysts, they're going to open higher. And one of the first things I look at is the longer term chart and time frame. And the reason I do this is I want to see how market participants are positioned coming into this day. And so we're going to take a look at these 2 examples. We'll look at the long-term charts. We'll get a sense of how people were positioned and how this impacted my thought process and whether it caused me to lean one way or the other coming into the day, whether it be long or short. The next thing is the nature of the catalyst. I think to a certain extent, I may be in a very small minority in the short-term trading world in how I will use the nature of the catalyst. Sometimes this can be a huge advantage in very small specific types of catalysts that short-term traders may not pay attention to or not understand. What I say off the top of my head, one of those might be in certain merger situations, how merger ARB funds might react based on the way the takeover is structured and things of that nature. In those types of situations, the nature of the catalyst can be of importance to me, because I know that it will ultimately, over the course of a day or 2 days or 3 days, will push stock in a certain direction that gaps higher. And then sometimes to a lesser extent, and I'll go through the examples of catalysts for these 2 setups as well. And then finally, the tape, something we teach reading the tape. We have a reading the tape course. We have reading the tape mentoring sessions every day. And the reason why we continue to teach this and we see that the top traders on the desk are quite good at it is because when you drill down into the lowest possible time frames, what you're doing by examining the tape very closely, the tape is time and sales and also the level 2, the bids and the offers. And by looking at the time and sales and the bids and the offers, we're getting a sense of, on a very, very micro level, on a very short time frame, where the buyers are, where the sellers are, and moment to moment, are they controlling? And when you put that together with the price action, and when you put that together with the catalyst, if it's a very important catalyst, and if you put that together with how people are positioned coming in, all those things together are going to give you the largest possible edge and allow you to put on the most risk responsibly. So here we go to the charts. So the first thing was, this was actually today, stock was gapping higher, AAOI, and they had raised guidance. So what I did, first thing I did was I looked at the daily chart, and I saw that it had been in a very strong uptrend, but recently it had broken that uptrend, had gone down on heavy volume, and had broken below, I think, around $48 a share, traded all the way down to 40. In the last week or so, a bunch of people were buying it in the low to mid 40s. Before it gapped up. You can see a little summary there. That's the written summary from our game plan sheet. It was the first stock discussed. I put in some levels to take a look at, and I put in a kind of a summary of the catalyst. It was in an uptrend. It broke the uptrend. Had sold off a bunch recently. So sellers, from a big picture perspective, sellers are in control, and we know in the last week or so that a bunch of people got in at much lower prices in the mid to low 40s. The stock was gapping up above $50 a share. So a bunch of people are 15, 20% in the money in a stock that had recently broken down technically on the higher time frame. The next one, big picture, is NBIX. This was yesterday's number one idea. This news actually caught my attention. It's not a stock that I normally have trade or have maybe even traded in the past, but the news seemed very important. And I also liked how this, on a bigger picture time frame, had basically just been consolidating, moving sideways for a very long period of time, was being bought in the low 40s, was being sold in the high 40s to low 50s. And the news that came out was they got a drug approved. They were going to be able to market it starting in next month, and there was no other treatment. So to me, biotechs can be a bit of a wild card. Sometimes you get approvals and they sell off quite a bit because they were anticipating the approvals. But when I see a news item where there's a treatment that's been approved and there's no other treatments, and I know how this will play on CNBC and the financial television, and retail people can understand there's a condition where people have involuntary muscle movement, and now all of a sudden there's a drug to treat that. That's kind of a big deal. And if it can hold that large gap over the next few days, at a minimum, can go test the prior high at the top of that consolidation range and perhaps even break through it, and we'll see. So that's kind of my mindset coming into this one was, hey, profit taking right on the open on the large gap, but if it can find its footing, I don't know, what levels do we put there? 49 in the pre-market, 49 to 50. If it can find some footing in that 49.50 area, catch a bid, hold a little bit higher, maybe we'll have something there on the long side, maybe a multi-day swing if it doesn't get back up to 54 or so, which is the top of the daily. So those are the two big picture setups. Now we're going to kind of drill down into the actual price action that happened. So we'll start with the one from today first. This was AAOI. And I left my markup. We talk about this in the morning meeting before the market opens. And we kind of run through the scenarios. What does it look like if it comes down? What does it look like if it then bounces up? What does it look like if sellers are going to be in control? And I kind of marked it up in the pre-market and kept that there for you just to see, what did it do at the target areas when it started trading. So you can see in the pre-market, it actually put in a high around 51 and change a share. You can see at the top of the chart, there's an X there, which I thought maybe in the pre-market right on the open, if it got there, that would be your safest, best risk-reward short. But we also understood that $50, where it was gapping above in the pre-market, if it first move was down from there, then we were looking at 48 and 47, the next kind of support area. So first move was down. I did not short it in the pre-market. I shorted it right on the open. And if I can't get the best prices, and this is a rule you should generally follow, if you can't get the best risk-reward prices, you put on a smaller position. You still want to participate if it's moving in the direction that you're expecting, but you want to put on some less risk because the risk-reward isn't as good as on those entry prices. So first move was down. It took out 49 right away, came into 48. You can kind of see tried to bounce. And what did it do when it came up to 48? It stopped right there and started the second leg down. And so that was kind of your confirmation. First drive is down, pops back up to what we had as potentially a first support and acted as resistance. And so then you got your second leg down. I think ultimately it got down to that, kind of worst, what I thought was kind of worst case scenario around the 45 area. It went through it a little bit. Now it's starting to bounce. We'll see where it ends up closing for the day. So good example of we thought that the bigger picture, remember bigger picture, broke the uptrend. People had gotten in at much lower prices. They're going to be incentivized on a large gap up to sell. And first move was down. And so you focused on the short. It was a very, very clean short. People who got short on the desk, obviously, they were rewarded quite nicely. The next one was the one that we covered a couple of days ago, or actually yesterday, one that was set up a little bit better for higher prices. This one came in on the open on the profit taking and stopped on the dime right at 50. Now, if it went through 50, I would have been happy to buy it in that kind of range I highlighted right there between 49 and 50. And then today, I came in long it because it stopped at 50 around 10:30 yesterday, then moved up higher, held higher, then you can see another held higher again. And then this morning, you can see I put it on the sheet again as a top second day play, kind of with our target areas. I think we had 52.5 and 54. And so, we came in today, it opened in the 51s. If it gets above that 52.5, momentum trade up to the 54. In this case, I already had my automated script from yesterday when I got long at 50 to sell it if it got above $54. Finished out, turned into a swing trade, got up to kind of that target area. Now we'll see if it ends up holding up here, closing above $53 and then break through today's high on Monday. We'll look at it to continue higher. But those factors, I use those different factors. In particular, AOI on the open, that price action to the downside. Use the tape, obviously, pops back up to 48. You see a seller at 48. That's your confirmation. So when you put all those factors together, gave us two nice trading opportunities in opposite directions. A couple of things to point out. Number one, real-time positions you're seeing there shows up during the day. When I get shorter, I get long. If it's long, it shows up as green. If it's a short, it shows up as red. I get flat, it shows up as gray. You can follow along with some of the top traders on our desk as they're putting on these positions. The other thing is we walk you through in the morning meeting before the market opens, best stocks, best setups. We record it, so if you can't attend it live at 8:40, 8:50 in the morning, it's up there 20 minutes later. You watch the recording. Check it out. I think we have a free trial or a $1 trial. Generally, these things, if you are an active short-term trader, this thing, what it costs for a year, can pay for itself usually in the first couple of weeks or the first month. I think it's a great value. So hopefully you learned something today. Thanks for joining us.